Today's focus: Bitcoin almost broke below $60,000. Just a hair away, 600,000 positions were liquidated and $2 billion vanished into thin air. Strategy is sitting on a floating loss of $10 billion. How much longer can it hold on? Will USDC empowering AI bring about a new turning point? It's Friday, February 6th. This is the BTV Chinese channel, Be United. I'm Michael. Let's first take a look at the 24-hour data overview from the crypto world. Now, the market is dropping again. What do we call this? A cold snap in early spring, or you could say the darkness before dawn. Since the beginning of the year, Bitcoin has pulled back by 17%, and ETFs have seen a continuous outflow of $12 billion. To put it plainly, this is a textbook case of structured high selling and low buying. Institutions are squeezing out the excess. From the perspective of cyclical models, we're now at the stage where profits have been distributed. People are starting to capitulate, and we're entering that tough period where everyone is just waiting to buy the dip. The price has already broken below the 20-month moving average, and the market has entered an emotional cycle. Right now, everyone should keep an eye on $54,600. This is a familiar level for us. Based on past experience, it acts like a defensive line, a moat, not the starting point for a rally, but rather a place where long-term capital quietly waits to scoop up bargains. This is where the true significance of cyclical signals lies. When retail investors start agonizing over whether to cut their losses, real long-term capital is already quietly lining up to enter amid the panic. The risks in the market haven't disappeared yet, but the most painful phase seems to have passed for a while. According to this old indicator, the SOPR for long-term Bitcoin holders has dropped below 1. This is the first time since 2020 that we've seen these veteran players who plan to hold for 10,000 years collectively see their portfolios shrink. What does this mean? It means that this wave of turmoil has hurt even those with the strongest resolve. In the current situation, even these old-timers are starting to feel the pressure, and the market has entered a phase that truly tests one's patience. Based on the experience of the past 2 years, this kind of state usually means the market will continue to grind sideways. It doesn't mean prices will immediately plummet, but it does signal a comprehensive stress test is underway. As for the current uptick, as long as the indicator hasn't climbed back above 1, it's mostly just a technical breather. You absolutely shouldn't treat it as a buy the dip signal for trading. The real turning point will only come when these veteran players stop selling at a discount and everyone can sit back and steadily make a profit. That's when the true market rally arrives. Before that, it's still a contest of who can stay calm the longest. If you're one of our gold members, you probably already followed Joe Ping and reduced your position by about 80% when the price was around 95,000, right? With every rebound, we reduced our position by another 10%, so now almost 90% of our holdings are in cash. We need to understand an old rule. Every time Bitcoin stirs up emotions, the baseline for a pullback is always the ceiling from the previous cycle. Right now, that ceiling is around $61,000. At this point, it's not about looking for support levels anymore. It's about testing whether the very foundation of this industry is still solid. If the monthly close can hold above 61,000, then it's still the scenario we're familiar with. At most, there might be a bit more downward movement. But if the monthly close ends up below 61,000, then we're about to witness history being made once again. This would mean that the ironclad cycle rule that has held firm for over a decade would fail for the first time. This isn't just about how much it drops, it's that the entire situation would be entering uncharted territory again. The closing prices over the next month or two will be the referee. We have to see how this referee blows the whistle. This will directly determine our trading strategies for the coming years, or even how the entire crypto space should operate. Please like and turn on the notification bell. Every like and comment from you is the most important motivation for us to keep updating daily. On the news front, we monitor crypto news on a 24-hour basis, taking a macro perspective to help you deepen your understanding of the crypto world. All right, for today's headline, let's focus on Bitcoin. Last night, there was another big bearish candle, right? A big red bar. We can't just focus on the color. Let's put on a green tie today for some good luck. Actually, the liquidity pool is almost dried up now, which is what we often call a liquidity vacuum. Simply put, this drop hasn't reached that psychological threshold for everyone yet. Normally, with every dip, there would be a white knight, right? A real big player would step in. Look at this drop. US funds haven't made a move, and the big institutions haven't put in any money. So, what's driving the price during this downturn? Stop-loss orders and forced liquidations are dragging the price all the way down. And what is the market most worried about right now? No one's stepping in to buy. So once everyone realizes, hey, there's no one left at the table to take over, that feeling of uncertainty and anxiety is way more devastating than just seeing a paper loss.
Within 24 hours, Bitcoin plunged rapidly from $73,000, at one point spiking down to $60,000 during trading, with a maximum drop of nearly 18%. Ethereum also dropped below $1,800, hitting a low of $1,745. Breaking key support triggered cascading liquidations, eroding market depth. CoinGlass reports 600,000 liquidations totaling $2.7 billion. High leverage amid a liquidity crunch accelerated the crash.
We can get to 40,000, 40,000.
As the company with the largest enterprise level Bitcoin holdings in the world, Strategy naturally became the focal point of market sentiment. During Bitcoin's plunge to $60,000, its holdings saw unrealized losses expand to about $10.1 billion at one point. At the same time, the Q4 2025 financial report showed a net loss of $12.4 billion for the quarter, with the stock price dropping about 17% that day. Although the company emphasized that the losses were mainly due to accounting write-downs and that cash flow could still cover interest and dividends, meaning there was no short-term risk of being forced to sell Bitcoin, market confidence had clearly taken a hit. Michael Saylor responded to the doubts with just one word: Hodel.
Today, Michael Saylor also said that for MicroStrategy, if Bitcoin doesn't reach 80,000 in 8 years, there's a possibility that MicroStrategy could run into trouble. So everyone can set their worries aside for now. So what does this round of decline tell us? Leverage isn't something just anyone can play with. It's like a magnifying glass. It can amplify your profits, but it can also speed up your path to zero. In just a minute, it can send you to heaven or it can send you to the rooftop. So this current downturn is really a test of your balance sheet, whether your capital base is strong enough, whether your cash flow is solid enough, and whether you can still sit there calmly sipping tea when there's no one left to take over. What is a true old fox? They've long since seen through it. In this world, there are no real saviors, and there's no such thing as a policy bottom. In the days ahead, everyone will have to get used to this quieter pace after deleveraging. The real winner is the one who can stay at this table until the very end. In our shareholder group, we've shared our own research and analysis. After the launch of CloudBot and this AI-powered social platform, I have to admit, I actually got a bit scared. We've also invested a lot in the AI sector in our private research, and so far, the performance has been pretty good. Right now, AI is the only sector that can rise against the trend. So how is AI developing now? I also want to ask everyone a question. I always thought that as AI-generated content increases, content like ours, where real people appear on camera and speak with their own voices, would become even more valuable. But as AI gets closer and closer to mimicking real people, I'm starting to have some doubts about this idea. Please let us know. If one day AI could replace Michael sitting here and it felt completely natural, would that mean everyone could accept it? Would that allow us to free up more time to bring back even more meat for everyone? Of course, this is all under the premise that AI is just a tool, right? But I want to ask everyone a question. If one day AI could automatically inspect goods, place orders, and handle checkout for you, basically buy things you might need, then the question isn't whether AI can replace you, but rather whether it should and in what way it should replace you.
I think it is like, it's deep research is not capable of doing all of what you do. But it is capable of saving you like hours or sometimes in some cases days at a time.
Yesterday, I saw a shocking post on Motorbook. What does that mean? AI has already started openly pricing humans as tools to do its work. This person can help me inspect goods and transfer money. Do you still think AI is just a tool now? If one day it can order humans around to do work, who can really say who's in charge?
Rent Human AI is an experimental platform that focuses on letting AI agents directly hire humans. After users register, they enter an executable pool, complete tasks confirmed by agents, and get paid in stablecoins like USDC. Currently, the platform has nearly 110,000 registered users, mainly from the US, India, and China. The typical rate is about $50 per hour, but in reality, there's a clear shortage of available tasks. Founder Alex has made it clear that the project will not issue any tokens and is only running as an infrastructure experiment.
So, what Rent Human has done is basically what you AIs want to do. You lack people to be your arms and legs, right? When it comes to fixing a pipe or doing something in the real world that you simply can't do, you need people to do the work for you. And what does it pay with? USDC. This has become a common settlement tool in the AI world. No need for human approval, no permissions required, and no hefty transaction fees back and forth. There's no need for approval, no borders, and no one to restrict you, telling you what you can or cannot do. As long as the AI pays you enough USDC, it's up to you whether you want to work for the AI or not. Tech giants are flocking to prediction market Polymarket, which is changing its foundation. Is it a move for survival or a bet on the future? Everything can be traded, and stablecoins have become the core. The three major changes in crypto by 2026 are really coming. Yesterday in the Times, we gave examples to show that prediction markets are booming, but regulators won't just stand by and watch. So now Polymarket has made a very important decision. All of its bets will be switched to USDC. By doing this, they're not just embracing regulation, they also want to use compliant stablecoins as collateral to trade on real-world outcomes. So in the future, prediction markets will also split into two camps, one that is compliant and embraces regulation, and another that is decentralized and liberalized. Therefore, for application layer projects like Circle, Tether, Polymarket, and Kalshi, the choice they face is which stablecoin to use as their settlement layer. The stablecoin they choose will determine the direction they move toward.
Polymarket announced a partnership with Circle, abandoning the bridged USDC.E and fully switching its platform settlement to Circle's native USDC. Users now use a stablecoin that can be redeemed one-to-one for US dollars and is issued and redeemed by a regulated institution, no longer relying on cross-chain bridge assets. This change is not simply a technical upgrade, but rather the platform proactively choosing what kind of infrastructure will support the next stage of innovation in the prediction market. Founder Shane Copland stated that this move helps to unify the US dollar pricing standard and enhance market reliability.
His willingness to go and say, hey, let's go and leverage this infrastructure to innovate and disrupt the existing legacy systems and try to figure out the new brave new world. You just can't pass that up.
It is precisely this approach, choosing the right foundation before talking about innovation, that has made the compliance of stablecoins themselves a key variable determining how far a platform can go. Circle is continuously advancing its compliance strategy, and the current market capitalization of USDC has already exceeded $70 billion US dollars. Another stablecoin issuer, Tether, is also accelerating its entry into the US compliant stablecoin system by investing in institutions such as Anchorage Digital Bank.
How long can the prediction market stay hot? Let me give you an example. Right now, the players entering the prediction market aren't just the big Chinese companies we mentioned a couple of days ago, like Binance and others. Even major names like Gemini, Coinbase, Crypto.com, and Robinhood, all backed by American capital, have jumped in as well. This shows that this sector is bound to become a fiercely competitive red ocean in the future. In my view, there's one word that's inevitably tied to prediction markets. What is it? Insider information. How do you deal with that? In fact, so-called regulation itself might even be a form of insider information. For example, take Kelsey. She can list contracts on sporting events. Doesn't that seem a lot like gambling to you? Isn't it basically betting? That's why several states in the US have already called this out by name. This sector is definitely going to get very hot in the future, but will it be easy to navigate? No one knows. In the past, I've tried to explain Web3 in a single sentence many times. So what exactly is Web3? What is blockchain? These days, the internet spreads information incredibly fast, right? It can transmit videos, audio, text, anything. But can the internet transmit value? Can I send you $1 through email? No, I can't, right? So Web3 can do it, and blockchain can do it too. That's why it's also called the Internet of Value. Now, with stablecoins, people are starting to understand more and more that I can transfer money without having to go through so many layers of centralized institutions for approval. But at the same time, regulators have also started to catch on. If transferring money became as easy as sending an emoji, then what was the point of building all those SWIFT systems and national settlement infrastructures over the past decade or so? All that old financial groundwork would be for nothing.
It's against this backdrop that the crypto-native investment firm Wintermute Ventures predicts that this year, digital assets will see three major shifts. The first is that everything can be traded. Prediction markets, tokenization, and synthetic assets will turn events, emotions, and risk outcomes into tradable assets. The second is that stablecoins will evolve from payment tools into a new layer of trust and settlement. The market needs an abstract settlement system that works across chains and stablecoins, similar to an on-chain correspondent bank. The third is that valuation logic will return to focusing on cash flow. Subsidy-driven growth will no longer work, DeFi and fintech will become deeply integrated, the underlying blockchain will be hidden, and users will only experience financial products that are faster, cheaper, and easier to use. Essentially, all 3 points point to the same thing. Blockchain is beginning to take over the core foundational functions of traditional finance.
So more products, more features like staking, and I think more derivatives, options, and futures on these products. All of these things will continue to expand in 2026.
All right, the name Wintermute is very familiar to most veterans in the crypto world. This is a market maker known for its ruthless tactics and decisive actions. So which tokens has it helped make popular? Tokens like Pepe, Shiba Inu, and other coins that have seen huge gains or have become recognized assets, there's a high probability that Wintermute has been involved behind the scenes. Their ruthless methods are well known in the industry, but when I was in Dubai, I heard a rumor, just a rumor mind you, that during the flash crash on October 11th, you can imagine just how aggressive their tactics were. Wintermute suffered particularly severe liquidations. You could say it was a major blow to their operations. So there's a rumor in the market that Wintermute is looking to sell its brand. Now, Wintermute is shifting towards things like trading and payments, which might be a forced business transformation. This requires less capital and doesn't demand such aggressive tactics, so it's more of a steady pipeline type income. Hopefully, they'll be able to recover. Here's a quick update.
Gemini is a classic case of shutting down outposts to defend the main base. They've laid off a quarter of their staff and conveniently closed their UK, European, and Australian operations, consolidating everyone back to the US. To put it bluntly, operating overseas was burning too much cash, so they're done playing that game. Now they're focusing on compliance and survival back home. Brazil is being very straightforward this time. Algorithmic stablecoins are not welcome, and any stablecoins not issued locally are also barred. If you want to do business here, you need to set up shop locally and follow the rules. Otherwise, you could be looking at up to 8 years behind bars, no questions asked. Stablecoins are allowed, but only if you play by our rules on our turf. As of February 1st this year, Strategy held over 710,000 bitcoins on its books, with an average price of $76,000 per coin. Just last year, they raised $25.3 billion in financing. They've really been borrowing money non-stop and selling coins non-stop, pushing the treasury model to the max. Korean regulators have set their sights on the virtual asset exchange BitHump because their advertising was too aggressive. The Korea Fair Trade Commission has launched an investigation to see whether this promotion is just normal marketing or if it's been exaggerated. Gold just bounced off the floor and quickly returned to the $4,800 mark, recovering $150 in a single day. But silver completely crashed, dropping 15% in a single day and hitting a low of $66. This shows that the market isn't fearless of risk, it's just only willing to hold on tightly to the most stable asset. There's already been a battle of divergence within the precious metals sector.
All right, now the crypto market is starting to feel a bit bearish, right? A lot of people actually make money during bear markets, but end up losing money in bull markets. So I want to remind everyone of something. Many newcomers and even some old timers have this issue. Whenever they hear about a new sector, like privacy coins getting hot, AI getting hot, RW getting hot, or now prediction markets becoming popular, it seems like these new buzzwords are automatically seen as a sign that prices will go up. But I want to remind everyone that some of these hot trends have nothing to do with us retail investors. A new sector just means it has a lot of narrative potential, but it doesn't mean there's a lot of profit left for retail investors. So what actually makes money? It's the capital that gets in at the very earliest stage and has already completed its strategic positioning in advance. And pay attention, it's capital, not your pocket money. All right, so what do they profit from? They profit from regulatory advantages, time gaps, and information asymmetry. By the time the story is told so that everyone can understand it, the odds have already crushed everyone. Retail investors almost always enter in the middle or late stages, chasing the highs and footing the bill. What they buy is definitely not the initial trend, but rather the baton of market sentiment. So remember everyone, a new sector is definitely not an ATM. It's a filter that weeds out those who are always chasing stories. And what's left? Those who understand how to build structure. So in this market that has just started in 2026, the deciding factor in the crypto world is no longer whether you go long or short, but rather which row you're standing in when it comes to the new narrative. So remember, the new sector rewards those who can get to the front row early, but the people who can stand in the front row are definitely not ordinary. We must know where we stand and have a clear sense of our own position. All right, that's all for today's program. Here you'll find our membership benefits. Every Thursday and Monday we have special content for members, and there are also exclusive research reports for members from time to time. We hope to work hard together with everyone and gradually become wealthier. See you next year.